Hi, everybody. Brian here from. Hello, people. How are you? Brian here. See who we got over on our Zoom. We got Paul. Hello, Paul. How are you? Just getting all warmed up here. Just got my YouTube session open, so we're pretty well ready to go. Okay, so if you guys got any questions, always chime in as always. Today's looking pretty good, and just wanted to make sure everybody is cool. Okay, so I'm going to open up my sharing screen. Here comes my desktop. And if you don't see it, just pipe in and let me know. All right, so just give me a yay or a nay if you can see my desktop. I can see my desktop on my own YouTube, so no need to answer there. Okay, so welcome everybody. Brian here from quantlabs.net. Today I wanted to go over my new, what I call my big ass report, and it is a big ass report indeed. And if you guys can hear me better now. Okay, so we got a report working. There's a numerous components to it. First of all, I just want to show you last week with the S&P 500. Let me just show you here. Okay, so this is on Yahoo Finance. And you can see this is the GSPC S&P 500 over the last week. Okay, so it started here at roughly 27.20, and currently it's at 27.26. So it's barely moved. Lots of down day movements and just barely climbing back. And this is the golden standard of how everything is measured as a benchmark. So I'm going to show you the reports, and I'm going to show you some. I just went over this over the last couple hours and was really shocked on some of the returns that you would get in less than a week. So in here, we've got different versions of the, my report is this crypto long and crypto long set at $1 million or volume and 10 million per day. So it's to filter out any cryptocurrency pairs that can easily be manipulated. I can easily raise it up to, let's say, 25 million to filter out and only keep the highly liquid cryptocurrency pairs in there. So first of all, the data comes from Binance, the world's largest cryptocurrency exchange out of China. It is one of the more trusted exchanges out there. I'm sure there is some manipulation that goes on there in the smaller alternative coins, but I do think that some of the bigger coins are pretty hard to manipulate. But I'll give you some lessons to be learned as we go through the data. Also, so we have this crypto long document, which is the quote unquote big ass report. We'll go through that in a minute. I also have a spreadsheet as well, this XLS that's generated from my scripts. And what I'm doing is I'm measuring a variety of different technical indicators. These include, I just finished them up in the last few weeks, Candlestick Patterns for market reversals. I also have on one chart where I have trend lines and upper and lower, as well as Fibonacci levels. I also include other Fibonacci uses, moving averages, classical, RSI, Bollinger, and all that. But that to me is very secondary. So enough of the jib jab. Let me go through. So I'm going to first show you the 1 million and up volume. Okay. So it's a pretty big file. This is a MacBook, and it's about 4 megs of RAM on it, so it could take a bit of time. The file, you can see here, it's gotten still counting up. I'm using LibreOffice, so I'm going to show you how big the file is. I'll show you the file. So this file I just loaded up is over 6 meg, which I guess in the world of Word, that would be pretty big. Okay, so here's the, no, we want the other one. Okay,
So this report needs a lot of cleaning up. I keep a lot of this because it's early stages on the reports, but these are all of the buying signals that are generated as of today for the cryptocurrency pairs. So these are all the different ones at the latest bar, which I'm only using closing data. I don't use 1 hour or 15-minute. I just find it's too much noise in there, but I'm sure at some point I'll need to get into looking at hourly data. That's what Binance offers. So there's really no order yet in terms of opportunity, which is the better opportunity, the more optimal opportunity in this order. But it does display it in this order. It uses lower volatility. I need to adding a new momentum that I built out in my last round of new indicators. And also, I'm also using some other technical indicators as well, moving averages, I believe. Okay, so we'll go through the order of them, but in my report here, with this group of cryptocurrencies that are quote unquote buy signals, what I do is, as a comparative, I gather a daily volume mean. So this is the daily volume on average that meet these criteria. So you can see here it's over 66 million. There's also the group volatility, which is really a standard deviation. I'm also using p-value as well, which I can get into. I'm probably going to break it up into next week, where I'll show you more of the spreadsheet data, which includes R squared and p-value stuff as well. So we have R value, which is another measurement of accuracy in terms of forecasting and historical performance. So here we have standard error in terms of looking at historical data, and obviously when you have errors for standard error, you want it to be as low as possible. So I'm just going to get into the meat of the report now. Okay, so I'm going to walk you through all the indicators, and I'll try to address each one as we go through. So in this case, as a hint here, I'm not sure a lot of these currencies, but I can always load them up within Binance itself. And I'm just these are just random ones that I'm picking here. So let me just load this one up here. Okay, so this is Trading View that we can load up. Now, Trading View I use as a standard way to figure, using all the combined technical indicators that you could find in Trading View, it gives you a technical analysis summary overall. So I kind of use that to compare how this performs. So in this case, I'm going to give you some hints here. This currency is using BNB, which is Binance's own cryptocurrency. And from what I'm seeing, there's not a lot of trust in this particular coin because it can be manipulated by the exchange, Binance itself. So it's something I wouldn't really put a lot of emphasis on. But we'll just focus on it. We'll just focus on the mechanics for now. Okay, so what we have here is the first chart. Let me just explain this right here. So here, what I've done is, earlier I said I have a group deviation or standard deviation or volatility and volume. You can easily use these. You can easily use these as a form to compare against the group. So you can see here that the standard deviation or the volatility is a little higher than the group volatility. So you can expect more volatility. Obviously, the volume is not as high as you'd like it. It does meet the criteria. In this case, as I said, of 1 million. So it meets that. But you can see here the volatility has been somewhat pretty, a lot of swings here earlier in January. And then it settles down. But here's where the interesting thing is. We have a little buy signal here, and that's using classic moving average crosses. Also, we have a standard trend line as well, which has been down. But I'm starting to see, and you'll see more of these in this report as I analyze this more, is that a lot of these prices are now starting to potentially bottom out and starting to reverse. So in this case, what we have here is we have a Fibonacci over 1 day of trading, where we have our different levels of Fibonacci, and we can clearly see that the price is well below the golden zone that I've talked about numerous times, meaning it's undervalued and it is a potential buying opportunity because it's undervalued historically all the way back to January of this year. So knowing that, what we're looking for is obviously market reversal and upward momentum. That's where I've added new indicators into this report. Here, historically, we can see there's been a lot of negative returns using a standard normalized distribution for statistic purposes. We've got here some really serious outliers on the negative side. So again, this is one of those historically, one of these cryptocurrency pairs you may want to stay clear of. But what I've added over the last few weeks are these right here. Now, this is over the last 30 days. You can see here, I'm only using a subset of candlesticks patterns that will either give a bullish or a bearish signal. But you can see here exactly the time when we've been getting many bullish patterns over the last 30 days. Now, the problem is that as these patterns come about, especially bullish, will they be consistent? And I'll show you a report where what you can look at to say, yes, it looks like it is fairly consistent. So continuing along, what I've added here is now this new report with this little data here. And I'll just try to give you a synopsis of what it means. So here is a look back over the last 30 days. So the look back is now 30 days. And what I've done is I've done a Fibonacci retracement over the last 30 days. So what it's done is it's taking the maximum or the highest high in the bar all the way back for the last 30 days. Now, always remember that cryptocurrency never closes. So this, this does include weekends. So you can see here it's coming off a high. And right about here, we have a situation where the trend lines are starting to somewhat say we may have a bottoming process. Because here, what we want to do is we could either enter into this into this point here on an entry. Now, a lot of people say, well, how do you know when to do it? Well, historically, let me just blow up this chart here. And these numbers kind of help you determine that. So here we have our Fibonacci levels of 236, 382, 0.5, 618, and 0.8786. So usually, as I said, this is a measurement between the highest high and the lowest low over the last 30 days. So that's how that retracement is measured. So theoretically, if the price does break through the 50% line, that is a decent market entry, okay? But it's a little more simpler than that. What I'm hoping to achieve here is what we have here is we have trend lines. There's blue, two blue trend lines. There's an upward and a down trend line. So what I've got here is what I've tried to do is if it touches, the price touches any of these 30-day trend lines or regression lines twice. So basically it's a measurement of either the highest high and the previous high using typical peaks and troughs analysis. And then it's trying to estimate where the third breach will be on that price, or it'll try to forecast where that next entry will be. So in this case, on the uptrend, if we do get an uptrend, we would hope to expect a potential entry to be at the price of 0.2007. So right now, we're kind of in here, roughly in there. And you can see here, historically, that these trends have hit 0.026 on the first one, 0.029 on the second one. So if the price does come up, it may be potentially an entry point of 0.20 to enter in. And if you ever wanted to short, you could do the same thing at this price at 0.153. But in the world of Binance, you're not allowed to short. So we can only focus on longs. So again, here on the timestamps is one of the things I do need to clean up. Is it would expect historically on these trend lines, when it will try to estimate when the next third touch will be on, the price will meet that trend. And this is what is expected to beat the price. And if you were to factor in the timestamp in a readable format, you'd be able to measure that. But it doesn't stop there. So that's one way to trigger an entry. The more accurate way is to say, okay, well, why don't we wait until our price hits these price levels right here? But here's the problem, is because it's been so battered down, would it be easier just to enter at these lower rates and wait till the price does break that upward trend line? So that's one approach. Now, here's where it gets interesting. So I give 3 different snapshots on the timeline, on the price line. One of 180 days, which is roughly 6 months. We also have another one of 30 days, or sorry, 3 months over 90 days. So you can see clearly here what's happening, okay, is that we have now a potential downward movement over the last 4 trading days, or 4 bars. Things are starting to potentially bottom. We can see here why that is because the RSI is undervalued. So I'm sure there's a lot of algos out there in the Binance world waiting to jump in, looking for this exact signal that it is undervalued, so it pushes up the price. And then therefore it'll push up the momentum. Another thing we can also use as a combined effort on an entry is when the price does hit that upward trend line, we can use that. Or we could also look for potential positive momentum here where it's still at 0. So let's say if it hits a 0.05 momentum, maybe that could be an entry. But this is where it gets really good, is that we know we're potentially in an upward trend. This right here, this very last one, may be a candlestick of some kind. And we can clarify that by using the 30-day momentum and actually see what's going on here among all these different candlesticks. And some of these may be actual reversals, and this one may be another potential continuation upswing. And we can determine that quite easily by going back to the candlestick reversals right here. And we can say, okay, our last candlestick pattern was on yesterday on July 1st with a bullish signal where the candlestick is 3 stars south. Sorry, 3 stars in south. And these are the more common candlestick patterns. So these can be used to confirm our theory. And sometimes I'm going to show you, I've also added in harmonic patterns to sort of like double confirm our market reversal potential. And we also can use head and shoulders, which I also include. This one looks pretty good, but you could say it might not be good enough. But I'm going to show you a way to get details on this particular candlestick. And obviously you want to look for the ones of very recent activity. Here we got quite a few candlestick patterns here on the 17th, 18th, and 19th. And I bet you if we look at that 30-day candlestick, we'll be able to determine what's been going on here. Hang on here. And okay, so we are looking, I think it was the 16th, 17th. So we're looking for, so start on the 17th, 18th, and 19th. So let me see if I can trace that back in the, so here we're looking at 16 would be here, 17, 18. Yeah, so 16, 17, 18. And let's see what those patterns were. So they are CDL 3-star in south. So what we can do is we can go in. There's a site I made reference to called the pattern site. And I've talked about this a few times in my past videos here. So let me just show you what we're dealing with. Okay, so historically, this website, this guy has pretty well been the standard of candlestick patterns. He's spent quite a bit of time, I'd imagine. He's got a book out. Obviously, I'm in here to pump his book, but it gets quite interesting where he ranks the patterns. He's got 103. He predicts if it's a bullish reversal or a bullish continuation or bearish reversal or bearish continuation. So this is the patterns we're looking for. And he estimates, this is the key here, the reliability, bullish reversal 86% of the time. So when you go back to this report here, it is quite possible, I'm not saying it works 100% of the time, but if we are able to determine these patterns here, where it still goes down, give it 2 more days, and it seems to be just doing what it's supposed to do as advertised. It is some form of bullish return. And this is where it gets really good. When you look at, okay, so here's the price, 0.020, right here on, that's going to be June 23rd, okay? So then when you go up to yesterday, you're now at 0.03. When you calculate those returns, that's about a 30% return in a very short period of time. Okay, so when you factor in what's been going on in the markets over the last week or so, you can clearly see that for that type of return in just over a week, which is 30%, that's pretty damn good. And I'm going to show you there's a lot more other indicators or performance based on that. So if I go to this other one, and I'm just going to only look at the 30-day report here, we can clearly see, again, this one, RDN BNB, 30-day return down at 0.05. It's now up just over 10%. Okay, so here we can clearly see once again that the RSI is being undervalued, and we have not a similar, but you can clearly see that there is an RSI is being undervalued. Those algos will start to kick in. Boom, up goes the price a few days later. And again, we've talked about the positive momentum. You can clearly see that that momentum is now starting to take effect as the price starts to move up. Now, here's the thing is that you will never see these sort of things in the news or even on the more mainstream crypto websites. So I find it quite interesting that these returns are really, really powerful on the smaller currency pairs. So that's pretty well the report, but I'm also going to show you the harmonic patterns, okay? So here we have another harmonic pattern. Everything stays the same. So let me just show you this as an example. So we have now this thing called a bullish crab. There's 4 types of patterns. It can be bats, butterflies, crabs, or Gartley patterns. I've done a webinar on that a few months ago. This clearly is a potential to confirm, to double confirm what I've already talked about on the candlestick front. And then we also have now here the head and shoulders. Now here, historically, I'm using it's 1,000 hours worth of hourly data. But here's the interesting moves. Here's the head and shoulders move. Here's the neckline. Now it's broken through our neckline. And that is the key right there. So I think this is a really good entry point. If you are able to generate a head and shoulder, breaks through the neckline, it will break through. And this little green dot basically means we expect. So if you took the measurement of this neckline to here, the maximum, that is the same distance to here. So that becomes our expected return. So this cryptocurrency is really, really good because we are seeing not only a harmonic pattern that's bullish, but we're also seeing a head and shoulder that's like now triple confirming that we have an entry point that is really potentially good. So if you look at the candlestick patterns here, you can see here we're getting, I don't know exactly what time frame this happened at, but we could probably see it through the, as you can see here, a little wedge gets created, consolidates, boom. Now it breaks that trend. So it's going to be at this point. And that is probably a really good entry point there. And it looks like it's starting to go a little positive momentum there. And when you start to, so you look at the 90-day, it's starting to move up. We have that. Now we have positive momentum here. And the RSI, as soon as it hits that RSI lower point, at some point, and here's another thing I want you to remember always, is that whale traders will always test the pricing moves to shake out those weaker call them participants in the market, so that when they see that this algo is going to get triggered, the whale traders are going to know that. They're going to test it, drive the price back down if they can, and they'll do it again on that third touch right here, as you can see. Usually, everything in the world of trading, everything seems to come in threes. It's what I've been told, and you can somewhat see it 1, 2, kind of 3, and we may have a little bit of a breakout. And the price has been undervalued according to our RSI here. And then again, it goes just slightly over a positive momentum. So here again on the price, let me just get a better 30-day candlestick move. This is a 30-day. So this takes us all the way back to January 28th. The price is roughly at, well, it did go as low as roughly 0.0019. It is now at 0.002. So that's, again, a nice 25% move over a, I'm going to 1, 2, 3, over a 5-day move. That's not bad. Okay. So these are sort of things that you want to look for. Now, another way to really understand how to call it quadruple confirm your theories is when you look at the moving averages right here. When the moving averages, okay, so first we have this one, the EMA 200. Everything's undervalued. We know that. Okay, but what you also want to watch is the more sensitive moving averages of the simple moving averages of the 20 and 50. Right here, they cross, it dropped, but see how tight they are? And there's pricing pressure, drops a price, and it starts to widen. And once again, things start to tighten up. And I'm not saying there will be, but there could be a potential upward move. You can see there's a couple here and a few here. So that is pretty well a decent way to measure the world of algorithmic trading. So I'm going to stop for a little bit. Anybody got any questions so far? Thanks for the like. I appreciate it. Anybody got any questions? So this one, what you're really looking for are exactly what I've hinted at. For this particular pair, there's Edo Ethereum. Yes, there's been a lot of negatives, but the pricing looks good because we have this bullish crab, and that's current as well. Not only that, but we also have this breakthrough on the neckline on the automated head and shoulders. And sometimes I have the ability to generate a inverted head and shoulders as well. Again, that's more shorting, but we can't do that, so it's irrelevant. But these are not common. Okay, these patterns are not common. The head and shoulder, neither is the bullish crab. But because we have double confirmation, we can safely say, as I said, that we have probably a really good upward momentum. But when you look at the historical 0.024 to 0.255, you do the math, that's probably roughly, oh geez, not much, 10, 15% move, but still, that's still a lot better than what you'll get in the markets right now. Because as I said at the beginning, when you look at, let me just see here, get you the S&P 500. Like I said, it started here at 2720, and it's just barely budged a week later at 2726. So considering when you get a 10% move, that's pretty strong. okay, comparatively to the benchmark that everybody uses. So again, any questions or comments so far? So what I'll do is, again, this is a million. If you want to ensure that this is a liquid cryptocurrency, this particular one, what you're going to want to look for, you can see it's a safe bet because it's a fairly has low volatility, below the 0.08 of the group signals, as well as the volume's not too bad at 19,000. And then again, you can clearly see the valuation of this when it's undervalued here. When you look at the trend, it is just breaking through, and you'll probably make all your profit when you are above the historical trend. And then that goes all the way back to roughly about 1,000 days. And again, here we have another buying signal right here to say yes. And that's, again, based upon classic simple moving average crosses. Okay. So this, if you ask me, this is a good one right now. Okay. So better yet, you're better off to look for those harmonic patterns combined with the automated head and shoulders as well. That's probably what you want to look for. So let me look for some other harmonic patterns, see if we can find anything. Okay, here's another one. Oh, no, that's the same one. So here's another one. Let's check this out. This is the ARN Ethereum, this pair. Let's see what we have here. So this is a fairly volatile pair compared to the buy signal average. The volume, but notice the volume is very low. So this is where you got to be very careful, because the volume is below what we really want compared to the other cryptocurrency pairs. Not saying this one is manipulated, but I would be very careful on this because there may be some false buying. And when you look at this sort of so, okay, looks like my Mac froze for a sec. This sort of thing is just, I don't know what to say on this. It popped. I don't know if this could be a manipulation. Who knows? But it's just clearly there's virtually no money to be made since the beginning of the year in this pair. So it's been a slight upward momentum, but to me the volume's too low, as well as it has had a few positive returns. But here you see, oh, I'm sorry. This is going bearish because it's a bearish Gartley. I should have looked at that. So candlestick pattern, it's throwing out some bullish. So here's some bearish. Yeah, I don't think I'd be interested in this pair, but it has consolidated, has broken through. So I don't know. I just don't like the looks of this. And the moving averages are fairly tight as well. But again, it's that RSI. It's undervalued and it's popped. So that seems to be a general trend I'm finding when the RSI does drop below the 30. It is potentially, that's when the algos go crazy and does take advantage of that upward move for a little bit. So here you can clearly see that it has moved up over the last few days. So if I pull up the 30. So here we've gone from, 0.0013 to 0.016. So that's what not much of a move, but it has gone up. So be aware of these, how these things work. Here's another one. We have now that's the same as the previous. So here we have a bearish crab for KNC Ethereum. Obviously you don't want the bearish ones. Candlestick pattern bullish, so it's throwing out some bullish. But usually these harmonic patterns are very reliable. Looks like something is eating up my memory, so hopefully I'll help that out. I don't like bearish harmonic patterns, but the bullish I like. We've already found one. These trend lines are just crazy. I would even render it useless for that scenario. Yeah, I just don't like these. See, we have here an overbought situation, and it gets pounded and down it goes. All right, so let's look for another harmonic pattern. So here we have a positive or bearish, sorry, bullish Gartley. So there's the pattern itself. We have a bullish, again, that similar pattern as before. So that was for the middle of June. Here's a trend line. It has broken through and has kept that trend line in place. So here it has kept in place. But again, as soon as that RSI hits, clearly matches, goes back to still being worthwhile. And our momentum now goes above zero. And here's that one move from 0.0224 to 0.024, roughly just over 10% in a matter of a few days. So if you're watching this every day, that's a pretty good return over 3 days, and you could still potentially hang on to that trade because you can see here that the moving averages are starting to widen out, which is a good sign between the SMAs, and that is a good sign because right here is where you may, I won't say you have a buying opportunity, but if you watch these reversals, again, watching those harmonic patterns, watching those candlesticks, that'll help gauge. And it looks like, and I'm consistently seeing the RSI is really helping out here. So again, all of these, and then boom, 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 up it goes. And you can sometimes watch the volume too. But along here, this is a classic screaming at the markets, and give it a few days and boom, up it goes from being undervalued under 30, and it's back up to 50 on the RSI. And again, we can capture that trade on that upward move, and that's over 4 days. That again is roughly just over 10%. Not bad, not bad at all. Okay, let's look for another harmonic pattern. So we have a bullish on BAT BTC. Let's see what we have here. So here's the pattern, bullish BAT. So oddly enough, we do have a automated head and shoulders here, but it's clearly not working on the way we want. I'd be a little leery on that because the price is not broken through our neckline. But our last bullish pattern, candlestick wise, was on the 26th. So let's see what we got. This is quite interesting. This trend has broken up through the trend, and you can see here the Fibonacci's. So that right there on that 50%, that would have been your point to buy in. And now it's potentially it's gonna go up. We don't know that, but that would have been a good point if you wanted to use the Fibonacci levels. So let's check out right here. Moving average look back, 90-day. We want here. This is a nice 4-day upswing. So that's from 0.003, roughly here, all the way up to 0.00. Unfortunately, I don't have the right precision here, but you're looking at, again, a roughly 10% move over 4 days. Not bad at all. And again, if I try to match those candlestick patterns, I believe the last candlestick we had on the 26th, bullish, again, that reliable 3-star in south that we looked at earlier. Let's see if it does match up on the 26th. So that would be roughly here. Okay, so the pattern would have been formed right here. So let's look at that pattern again, the candlestick. So we are looking at the 3-day. So we got 1, 2, 3 moves, and it looks like we have some form of move here. Now, I believe this one has no If I remember, this one has no tails, no wicks in this third candle. Let's see if we have that. So when you look at it, 1, 2, 3. I don't know. You tell me, folks, if that's good enough. We have a bunch, but as soon as we have one where it does match in the software using TALib, Technical Analysis Library, and it does call it on that 26 is pretty close, and we got 4-day move up, pretty smart. And then remember, that's an 80%, 80%, 86% of the time. So this is a very highly reliable, candlestick as far as I can see. So that's something to keep in the cap of the arsenal here. Okay, so we got a question from Quinkadink. Thanks for spending time. Quick question: what type of returns were you getting trading Forex annually? To answer your question, Quinkadink, I didn't like Forex because the volatility at the time was not there. The returns were like tiny. The broker probably obviously using Dukas copy wanted me to throw in a lot of leverage, which meant there is a lot of risk involved. It was very random. It was a totally different strategy that I used, and I was watching the sub-minute level, and it was useless. I lost too much money, so it was all negative, that kind of return. But here, you can clearly see the kind of returns that you can get watching this type of system and going through this more and more. You can clearly see there's more accuracy as you start to understand the nuances of this whole entire system or set of charts in this report. But it seems to be pretty good in terms of reliability. And if you have, that's me, combine it with the RSI where it gets undervalued, and you start seeing those harmonic patterns, and you may start to see the odd automated head and shoulders working in your favor. Chances are you will get upward movements. And when they do move up, you get a 10%. I was looking at some of these reports and some of these pairs, and they were getting 25, and a few of them were actually getting a 50% return over a week. And again, you will not get those kind of returns with other asset classes. That's why I like cryptocurrency, because the volatility is so good and so wide. And the other thing I like about cryptocurrency is that you don't have to put any leverage in. It's just one-to-one. So you don't have to build up and add on your leverage, increase your risk, and lower your reward if the price moves against you. So here, I like what I'm seeing. And I just finished up this report as of last Thursday. So this is my first real analysis on this data, because the data is from today. All the charts have been generated today. So these are current moves. And there's there's quite a number of cryptocurrency pairs that are yelling at you as a buy opportunity. And understanding the volume and the volatility, you can lower your risk, but hopefully increase your reward. The other thing I like about cryptocurrency, especially from Binance, there's over 300 pairs to look at. And as I said, when the types of volumes that I can filter out, if it's 1 million or 10 million, I can increase my odds of opportunity and the number of cryptocurrency pairs that I can capture on those opportunities. So we'll keep looking at some more reports. Okay, so I'm going to look at a few more. And again, remember, this is for 1 million, but I do believe when you're filtering out only the cryptocurrency pairs that has a volume of 10 million or more, the returns in a shorter period of time are much higher. As I said, there was a few that I saw were at 50%. So we'll take a look at those. And that's, again, over a 5-day period. So we'll just take look at a couple other examples here. These are just random. So again, here we have a bearish. We don't want the bearish Gartleys. We want a bullish harmonic pattern. So here we have one Ncash BNB. Here's the pattern. Here's the trend. And you can clearly see it's been riding that lower trend line, and it's just breaking now the upper trend here, which is good. When you look at the moving averages here, they're starting to spread out. Again, you can see the RSI, it's undervalued here, under 30, and it pops up. And that's when you start to get hopefully some positive momentum. But here we have some not huge moves, but here you go. You got 1, 2, 3 from 0.08 to, well, as high as 0.012. I mean, on that wick, that's a 25% move over 3 days. And let me see the candles, what the candlestick patterns are saying. So we had a candlestick pattern. Again, that CDL 3-star in south, so far it's been reliable on June 18th. So let's check that out on this report here. The 30 days to the 18th would be roughly all the way back here. But you had to wait a while to get that kind of return. You probably would have dropped out. But you can clearly see it's been undervalued. And maybe I could change my strategy saying, as long as the RSI is undervalued, under 30, wait it out, don't do an entry. But once the RSI cracks that 30, enter into the market. And look what you get. You get a nice potential 25% move over 3 days. So that's just another opportunity we can use. And again, these numbers is not built on intuition. This is built on data. This is where I always say the numbers don't lie. And this is another decent example of that. So we'll look at one more example before we switch over the 10 million. So here again, we have a bullish on the EDO Ethereum, another bullish crab. Let's check it out. Oh, look at this. We have another great example of this. I don't know if did I show you this before? So you can see here, we have a head shoulder, boom, crack through the neckline. And I think we may have talked about this earlier. Yeah, no, this is we showed this earlier at the beginning. So those are just examples of the buying opportunities on those cryptocurrency pairs at $1 million. So let's see what we find with the 10 million, which I believe I already had open. Yes, so we have the 10 million. So let's go back to the beginning, start looking for some harmonic patterns. So our first one here is a bullish crab. Again, this is what we've already seen on this one, the EDO Ethereum. Yeah, we've seen that. So if you guys got any other questions, let me know. We may have seen all these already. So KNC, that's a bearish. We don't want that. Bullish IOTA Ethereum, 1 day. Not sure if we've shown this. This is a Gartley. So our last signal was June 15th. Here it is. So yeah, so we have a wedge created. Consolidate, breaks through. I do believe we've seen this before. Let's see the RSI. See, it just touches that 30, and boom, it goes back to 50. So that's another way to confirm your. See right here, that's on the 90. It's probably on the 30-day. So yeah, you can see here it's below 30, and as soon as it cracks that 30, you can hope to bet that it's already reversed, and you can expect positive returns. Again, roughly, this case about 10%, just above 10%. I do believe we've seen this before. BAT, BTC, it's another bullish. Again, yeah, we've seen this before. So I'm just trying to show you something that we haven't seen. GTO Ethereum, I don't think we've seen this one. Harmonic Pattern. Oh, sorry, this is a bearish. We don't want that. Let's see, Harmonic Pattern bearish. We don't want that. Harmonic Encash BNB. So that last signal was the 18th. I'm not sure if we've seen this before. Yeah, I believe we've seen this before. Yeah. So but all in all, yeah, we're back to the beginning now. So, you know, in that data, there's roughly 4 buying opportunities, and that would be just for today. You run it tomorrow, and you probably get some more potential opportunities. They may be the same. We don't know. But out of that, I'd probably put maybe 2 positions on, or 2 pairs I'd be very interested in based upon what I'm seeing. So they seem to work okay. Anybody else got any questions or concerns at all about this? This is something every time I look at this, I get more and more confident with what I'm seeing. But again, you know, there are opportunities out there. When you look at coin market cap, the question is, let me just see here what we have out of the 100. And again, these are the most volatile, the top 100. So if I was to look at the market cap of all cryptocurrencies, trading volume over the last 24 days, 24 hours. Oh, I'm sorry. Yeah, this is good. But you can see here that we're hitting some positive momentum. Back to Quinky Dink's question, these are 24-hour moves. So if you were on Cardano, you'd be doing all right. You would have made 10% if you put on a position there. 15% on this one, on NEO, 17% return. So again, ask yourself, why would you put money into Forex when you'd have to put in a lot of leverage to get even 1/3 of the returns that you're seeing here versus dollar for dollar? Here you got 22% return, you know. So these are pretty good charts. And this is more positive momentum as well. So who knows? Everything really comes down to how Bitcoin overall performs. That's the granddaddy, and everything's related around that. So if Bitcoin does well, everything moves up. The question is, obviously, you want to capture the ones that will give you the more positive returns. But with this basic system, I'm showing like 10% returns over a couple of days. So you won't find any other asset class that gives you that. And if Bitcoin moves up, it's kind of like given that you should be able to make profit, because it's just how the markets work. So anybody else got any questions? Anybody? If not, we're just coming up to an hour. We usually average out about an hour on each webinar that we've been holding for the last couple of weeks. I don't mind. Anybody got any questions about general trading, automated trading? You let me know. At all? Who knows? Anybody? But overall, this report's pretty good because it just gives you more confidence with what you see with harmonics patterns, as well as the candlestick that you can verify. And if you get a automated head and shoulder, as in this case, so we have, as I said before at the beginning, this bullish crab. And then we have at the same time right here, we know that this would be a good entry because on this neckline, on this double the head and shoulders, and then we broke through the neckline. So it's a good thing. And then also we've been generating quite a few bullish candlesticks, specifically around the 27th here on that day. Anybody got any questions or concerns? I'll hang out for a little bit. Just let me know, and I'll try to answer them as best as I can. Anybody got any questions? No? Anybody? Okay, I'm going to sit here for a little bit, and hopefully someone will come back with a question or a comment about anything, really. Okay. Going once. I'll do it going once, twice, 3 times. Oh, and before I forget, let me show you the spreadsheet I mentioned earlier. The spreadsheet here is very useful for a lot of things. Not only with the report I've just been talking about, is this data. This is the spreadsheet I mentioned earlier. So here we have the cryptocurrency pairs, again, from Binance data. We have a variety of different columns I'll be either changing these or adding to them because I got more data to work from. So we have the time frame, which is obviously only data, or sorry, daily data. As I said earlier, if you've seen my past videos, we've got the Fibonacci values within, is this pair within our golden zone or below it? And if that's a buying indicator. Again, the buy signal is based upon the crosses of the 20 and 50-day moving average. We have a sell signal again if it's reversed, but again, that's for shorting opportunities, but we're not worrying about that in a long only exchange. This high head and shoulders difference is the difference between the neckline and that green dot I was telling you about, the expected move. This one here, the trend difference is the long-term trend, the slope. The volume is, as I said, if the volume in per day, and that's the last bar for that day. Momentum is basically what I do there is I use a statistical measurement, meaning I have a normal distribution, and depending upon the number of daily returns in that distribution, how many of those days are positive, and that's positive momentum. So that's what these represent. We also have, as I said, is the standard deviation, which is really the volatility. I've already talked about that. And I like to focus on lesser volatile currency pairs. Again, do we have a harmonic pattern? And as I said, it's a type of pattern that I've shown you earlier. Is it a bullish Gartley or whatnot? So that gets listed in this data. I also, if there's a bearish harmonic pattern, and here's the more recent stuff. So we have slope, R value, P value, standard error, and these are using standard regression techniques. And if you're familiar with geometry, meaning y equals mx plus b from high school, if you're out there, that's where these numbers come in. Again, it's just for accuracy. And this is the latest close price as well from that last bar, the previous or the same day, depending upon when this thing was run. So that's the data that I have so far. I'm going to be adding more momentum indicators in this data. And I'm going to use that as a way to sort, make the results, which are a way to measure the optimal trading opportunity using momentum with better momentum data. So I'm going to also include that in the next time we do this webinar on a Monday night. So we'll cover that. And right now, you can obviously, because it's a spreadsheet, you can do your own sorts and figure out whatever data you want to sort. So let's say you want to figure out what are the more volatile, or sorry, highest, sort by volume, let's say. So in my case, just got to make sure I got the right column. So in my case, I'm looking for column I, which is volume right here. So if I do a data sort on that column, descending, oops, let me just get capture all that data. So if I capture all the columns, and again, do the data sort, so you can use this spreadsheet to do your own analysis if you wanted. So in my case, let's say if I wanted to sort by volume, which cryptocurrency pairs have the highest volume. So you can see here the volume most likely will be Bitcoin, BCN, BTC, POE, or let me just make sure I got the right order here. That looks like the order is correct. So that's according to the Binance data. If I want to sort on volatility, we know that K is a standard deviation for volatility. So I can see which ones are the more volatile pairs. And you can do that again by sorting on column K it was. And then if you want descending, so again, you can see which ones are the least volatile. So this one, I believe, would be the least volatile. If I go to the bottom, that's going to be the most volatile, or it should be. That's theoretically what the spreadsheet's saying. So if I look at K here, oh, so that actually is the least volatile, is this one at the bottom. So that's pretty well it with the spreadsheets as well. Anybody got further questions? If not, I'll hold on and I'll do a countdown and we'll call it a night because we're exactly an hour. So I want to focus on this data with all the other data. So we'll focus more on the spreadsheet, what the spreadsheet will tell us, but we can also combine that with the report that I've shown earlier with all the charts. So we can, get more precise calls on where to put our capital based upon what I'm producing. So anybody got any questions? I'll do a going once, a going twice, going 3 times. So I'll wait a minute so everyone can hear it. We're out of sync on YouTube. Okay, hopefully people caught up. So I'm gonna do a going once, going twice, going 3 times. So I guess we're done. Appreciate you coming out today or tonight, wherever you are. Do remember, I'm gonna focus on the spreadsheet next week. I'll probably throw in some more data. We'll go over what the R value and P value means, the standard error means, this actual slope, because this is a momentum, and that's over 30 days, I believe. I have to look at the code. But again, you can sort it and then gauge, obviously the more slope it has, the more profit potential you'll have with that particular pair. And that's what we'll focus on next week. And anything else I'll show you as well. And again, the same technique will be easily applied to Forex data or even futures and options data using these same techniques. I wouldn't recommend using this on a lower time frequency like hourly or anything faster than that or lower than that. I don't think it's just too noisy, too much noise in the market when you do that. So any more questions at all? Okay. I'll do it going once, 3 times again, going once, going twice, going 3 times. Okay, I guess we're done. All right, so thanks for coming on out. Appreciate you being there. And if you got any other questions, reach me out on my social media, and I'll get back to you as soon as I can. And other than that, have a good night or day, wherever you are, and thanks for coming on again. Talk to you later.